Hey guys, I don't know if you can hear me or not, so let me know in the chat. This is my first stream. I'm Dan, the host of Habitual Crypto, and here we like to just chart out different coins, including Bitcoin, Ethereum, and other major altcoins, and try to give you a good sense of the best way to trade them. This is not financial advice, but this is the way I look at the markets, and I try to be on top of the best ways to make profits and keep your profits because the uh, the crypto market can be very volatile, and it's very new. I don't believe it's going anywhere. I think it's going to be um, really going mainstream over the next few years. The amount of institutional money going into crypto right now is it's unlike any year before this, any bull cycle before this. We we've seen Tesla just bought 1.5 billion dollars of Bitcoin. That is something that can't be ignored. It's They are one of the biggest companies in the world. Elon Musk is the richest man currently in the world, and they made more money buying that Bitcoin. It's said they spent or they got 1.5 billion at around $32,000. Um, it said that they made more money in that hour after the news was released than they did um, the whole last quarter selling cars. So, I mean, they're leading the way, and every corporation is now sitting down at the table saying, should we put a piece into Bitcoin, into the crypto market, even if it's 1 to 5% of their holdings, because the dollar is going down and um, they're losing value. Their savings is losing value while they could be gaining a big percentage over the next couple years, 10 years, 20 years. Um, MicroStrategy is one of the biggest investors in Bitcoin. He says, Michael Saylor says he's holding on to his Bitcoin for 100 years. So um, this time is a little different than the 2017 cycle. And yeah, I just want to check, does my sound good? This is the first time using this setup, so I want to make sure if you could let me know in the chat. Um, See if that is working all right. I'm going to assume it is, but I see John Spina's on. Let's got some music here. Sounds good. All right. Thank you, Sean and Victoria. Uh, yeah, so back to what I was saying. This time is definitely a little bit different than before. Um, just today, this morning, Bitcoin hit 50K for the first time ever. That's, 10 years ago, Bitcoin was at 5 cents, and now it just hit $50,000 today. Uh, the the amount of money going into this space is nothing to laugh about. they compare Bitcoin to gold. They say Bitcoin is going to be taking over gold. Gold being the analog model of a store of value, where Bitcoin is now the will now be the digital version of gold. And in most technologies, when you go from analog to digital, there's normally a 10x in value that goes along with it. Um, Bitcoin is right now, if you're looking at the charts, the total money in Bitcoin is in the, let's see here. Let's see, total market cap. Well, it's about 1.2 trillion dollars in all of crypto together. If Bitcoin hits about $53,000, we're looking at a $1 trillion market cap for Bitcoin. And gold has a market cap of about $11 trillion. And so if Bitcoin is to replace gold at some point over the next few years, you're looking at, a $500,000 Bitcoin. It's not crazy as much as it might sound like it is, but this is where the world's going. Every country has been printing money at an extremely fast rate. America has printed more money this year than they have the rest of the years combined since our existence. It's not sustainable when the inflation rate is so high. You're going to lose value in your savings account. So again, this isn't financial advice. This is just how I look at the market. And this channel is really going to be focused more on different trade setups for different altcoins and for Bitcoin as well. But just talking about some of the news while I do the trade setups. And, I just know there's a lot of newer people in right now, so there might not be, you might want a little recap of what's been going on in the crypto market right now. So with Bitcoin, we also, and crypto like Ethereum and Litecoin, this whole bull cycle, it started back in sorry, I'm on the wrong chart here. So this is the 2017 bull run. Basically, from here to here, and Bitcoin went up about 4,000% if you were in it when in 2016. You could have made quite a bit of money if you were able to time the bottom and the top, which is never easy to do. And I would always suggest what's called dollar cost averaging, where when it's a good buying time, when you're in a bear market, when it's low, you buy a little bit each day. And you have points set to where you're going to stop buying. And then on your way up, right here, this is when Bitcoin basically went from $1,000 in early 2017 all the way up to almost hitting 20,000 So a 20x on your money. That all happened in, you know, in less than a year. So, if you were buying all throughout 2016 and the early 2017, a good way to do that would have been to buy a little bit, because there was no real drastic moves in the market. And then maybe, once it got up to 3,000, maybe that was your point of I'm not going to buy anything past 3,000 and I'm going to let it, I'm going to let it grow. But then, you could have had, okay, and once we get to 7,000, I'm going to start selling a little bit at a time, every $1,000, every $500. That keeps it so, no one was able to time it at $19,800. So a lot of people bought, up in the $15,000, and then it crashed hard. And this happens normally. This was all retail investors. It was people like you and me. I remember everybody and their grandma talking about Bitcoin in the month of December in 2017, and people were asking me about it, you know, who I would have never thought even knew what it was. But mainstream media had a big part in that. Once it got over 10K, a lot of news stories broke and everyone was buying it. But a lot of people got caught up in the hype. They FOMO'd into it. And then because it was a retail boom, it went down about 65-75% in a matter of a week or so. And that happens with cryptocurrency, with these bull cycles. It's normally, a lot of gains on the way up, and then if you're not selling on your way up, you have the potential to lose a lot, or lose a lot of your profits if you bought low. So it's better to dollar cost average on your way up, take a little bit out, because you don't know. No one knows when it's going to really stop there, when it's going to go down. Now, I say all of that, and that's still a good strategy in this market. But one of the theories this time around, these cycles happen about every 4 years. And one of the theories is that the institutional money going in at this point it's huge. The retail boom really has just kind of started to happen since Elon Musk or Tesla bought 1.5 billion worth of Bitcoin. A lot of people heard about that because he's really popular with the younger generation, and it's a really big news story. It's all over CNBC. So that's starting to happen now, but it's very different than where 2017, that was all retail. The infrastructure wasn't in place for these companies to buy hundreds of millions and billions of dollars back in 2017, where now it is. The companies working on Bitcoin and working on the crypto market as a whole have made these. They've built the infrastructure for these companies to get in and buy $1 billion at once. Like that. That's something that wasn't really possible 4 years ago, and now it is. And since Tesla did it, many more companies are going to do that. They're not going to risk. The risk is now not buying Bitcoin, but it's not having any of it. That is the risk. If it does replace gold, every company, many people are going to want some of it as a hedge for their dollars. And so basically, I don't see this going anywhere, and I don't see once this bull cycle does top out, which a lot of most analysis say it will at least hit $100,000. The average, I would say, is between $200,000 and $300,000 this cycle, and then you know, Guggenheim, I can't say that right, but that is one of the biggest investment companies in the world. They said $600,000. They believe it will hit $600,000. So there's a wide range of where it could be, and I I'm not going to try to guess. And again, this isn't financial advice, but I think anywhere between 80 and 200,000 is 80,000 and 200,000 is a uh, you know it could start to correct a little bit. Now, when I say correct, I don't think we're going to see this 70% correction like we did in 2017. Again, that was all retail investments where this institutional money, they're not putting it in to make a quick buck and then get out. Most of them literally believe this is going to be digital gold and it will replace gold. So they're putting it in to keep it there for a long time. At least maybe they make 4-5x on their money and then they take out their original investment. But I mean, they're not just going to dump everything. They're not going to coordinate some big dump and bring the market crashing. I don't believe that's going to happen. Now, will we see a 40 to 50% correction? That's quite possible. But again, Bitcoin hits 200,000 and has a 50% correction, you're down to 100,000. I think that is much more realistic than it hitting 100,000 and going back down to 20,000. I don't think that's going to happen. So, and I think people are going to be amazed at how fast this market can go up. There are rumors that Apple might put in $5 billion into Bitcoin. After Tesla announced that was the next rumor that they might do that. And a good reason that might happen is because they just announced Apple Pay. You'll be able to pay with some of your crypto holdings. Right after MasterCard announced that, right after PayPal announced that, and Square, like all of the payment processing companies, Visa, they're all getting into the crypto. And like Apple, for example, a good way for Apple to instead of just letting people pay with Bitcoin, or Ethereum or Litecoin, they can own it themselves and use themselves as a kind of the bank, because they will be able to make profits off of us using crypto to pay as well. All these companies, they're not dumb. They're looking for, their piece of the pie. But Bitcoin is different than the banks. It is decentralized. No one can take it down. No country can put in regulations that destroy Bitcoin. it can cause the market to go down a little at a time, um, but the fact is everybody. Uh, let's see. Sorry, I didn't know if the music was gonna keep going. Yeah, it's going. Okay. So basically, my point is that that no one company, no one country or person can affect Bitcoin to the point where they can stop it from running the way it does. Um, and so, let's see. Sorry about that. So this is the daily chart for Bitcoin, and as you can see, we hit over 50,000 today. We got all the way up to 50,000, almost 600 on Coinbase, and if you're looking to get into cryptocurrency, Coinbase is basically an online wallet, an exchange for cryptocurrencies. You can go on there. You can buy. You can also now buy it on PayPal. They kind of when they announced that, that's what kind of started um, this bull run since the beginning of November or the end of November. We went from around 10,000 all the way up to and we up to 20,000, and then we broke through our previous all-time high from 2017. We kind of broke through it. Right here we had a little bit of kind of bouncing off the $20,000 mark, and then when we broke through over, it was not a long period of time. We broke 20K. It was December 15th, roughly, and we got up to 40K in 24 days. So we doubled again in 24 days. And then we had a slight correction, and then we've kind of this would be considered a breakout, and then this correction over a couple weeks is really this is a bull flag, meaning I'll show you here, meaning it's a consolidation pattern. So basically, the market settles down for a little while people accumulate more Bitcoin. And see, it kind of looks like a flag here, but it's not a very it's not a really big dip. It was kind of just normally it will break out, it will go to all-time highs, and then we slowed down a little bit and just accumulated. And then see, as soon as this line here, it hits many tops, and you can see this candle here and this one kind of set the line. And then you can see we hit again here. We hit again here, bounced off. We stayed in the middle. We hit the bottom here, bounced off. And then we started going up. And we had a breakout, but it was kind of what they call a fake out. So it came up, but then it quickly retracted back down into this channel here. And you can see we hit the top again, a little breakout, but then this one actually stayed above, and then it closed out the day above that line. Like this candle, this is a daily candle. This represents a full day. It broke out above the flag here, and then came back down, sold off again, probably because people who bought saw that it topped out here, and a lot of people new to the market they're like, oh, that's it, we're going down, back down to 10,000. So they had their chance again. It got close to 40,000, and they're like, oh, I'm getting out. So the first time it got up close to that again, boom, it went right back down. A bunch of people took profits or sold out completely, because it's fear. They're scared of either losing money they put in at the top or just losing all of the profits they made. But you know, they call people like that. They say they have weak hands. Now it depends on what scenario is yours. I believe in this market, so like dips like these, they don't phase me at all. We got to the top. It took a 20 about 28% dip from the top. Now, most people would say that's an extreme percentage, but back in 2017, we did that 6 or 7 times on the way up to the top. Like, this is normal in Bitcoin. This is normal in cryptocurrency. And you really got to have the stomach to handle that. And you really shouldn't be putting in any money that you can't lose, any more money than you're willing to lose. Again, none of this is financial advice, but this is how I look at the market, and I don't. These kind of moves don't phase me. I was expecting something like this to happen. Somebody I know that owned Bitcoin wanted to sell some of it, and they did sell some of it, but I told them, like, this is going to happen. This is an opportunity when it dips down this much to buy more. This is, I guarantee you, many institutions took advantage of this opportunity to accumulate more, because as you can see, after we finally broke out of this flag and closed out the day above this flag, you can see what happened the next few days. I mean, this was just a couple weeks ago, February 2nd, and we just kept going up until does anyone know what this day was? If you know, write it in the chat. But and if you can comment on the YouTube videos and the Twitch videos, if you can just write a comment below the video too. I know you guys are writing in the chat, but if you write below in the video, it just helps YouTube's algorithms make my videos more available to people searching. But anyway, this was the Elon Musk announcement that Tesla bought 1.5 billion. It, in a matter of, minutes, went up 22%. And now we are in another accumulation period, most likely. We've been accumulating. You could call this, if we go to the 4-hour chart, so this is the same chart, it's just each candle is 4 hours. This was another this was another bull flag, just on a smaller time frame. So let me see here. So, you know, you can really focus more on the top line here, but you can see we topped out here, went down, and these are 4 hours, so it's a smaller time frame. But you can see we almost hit the top here, hit the top here, went down, hit the bottom, and then hit the top here, went back down, and then finally held a 4 hour candle, and that kind of broke us up again to 48, where we hit basically another the previous top again. So let me see here. So I don't think there's any music playing. Is there? Can you guys hear music? Was it not loud enough? Let me know if you can hear the music. Oh, you said no either. Let's see. Let's see if it's just... Okay, so you could hear it, just too low. This is Vic Davi. He's one of my favorite artists. But yeah, so okay. Yeah, so this is right now we're forming kind of a rising wedge. So this is since we hit 48K. Let me chart this out here. And when you draw these patterns out, so I would be going by the first 3 candles here, and anything that wicks below it is just kind of, you know, it didn't stay down there. So most of the time you're going to get really close, and a lot of people trade, you know, day trade these channels. You know, they buy here. As soon as it gets back up here, they sell, and then buy again, and then sell again. Like, sometimes these patterns, a longer period of time, these patterns stay in place, the longer or the more efficient they normally are. So here is where this morning we broke out of, we broke above 50K, and 50K is a huge psychological number. So, you know, it's going to be very good once we hold above 50K and have a candle a full daily candle above 50K. But until we do that, that's a lot of people are going to look at that as a time they can take profits as well. They can sell some, or a lot of people are looking at it like, oh, it's too late to buy because it's too high now. It all depends on how you're looking at the market. Now, this is an ascending wedge because it's getting tighter, but there's quite a big channel here, so it's not like I'll show you, it's not like a triangle though. It's more of a channel. So normally this is more bearish. So the majority of the time, this is going to break down. So people are being a little cautious because of this pattern. Although on the way up, there has been many bearish patterns that Bitcoin has totally ignored. It has gone up. So let's say 4 out of 5 times this breaks bearish, and 1 out of 5 times it will break bullish. Bitcoin has been, with normal, stocks and equities, or other assets, these patterns will hold a lot better. And I mean, for trading within the ranges, it works really well. But as far as which way it's going to go, we're in a bull cycle, and Bitcoin is like the king of cryptocurrencies. It is, this is not a normal time for an asset like Bitcoin. So it's going to do things that people aren't, ready for, that normal technical analysis would tell you it's going to do. So, although this TA can work really well, it's not foolproof, and it's really something you have to, some people, some streamers or analysts only use technical analysis and just go by that 100%. And not that they're predicting where it's going to go. That's not what it does. The idea is just improving your odds. Okay, there's still risk, but you can depend. If you get a lot of indicators saying the same thing, your risk is going down because the probability of it happening is going up. So that's how people look at technical analysis. But I like to look at the TA and the fundamentals, which is everything I was talking about before, with the institutions, with the corporations, the payment options, the buying options for Bitcoin and crypto. So yeah, it's you can't always go by this, but it definitely helps a lot. And the way I like to chart these things out is, first I go to the if you take a look at this, we're on the 4-hour chart, and this is technically a bear formation. So it could break down. There's a very good possibility, but if you go back and look at the weekly chart for Bitcoin, okay, this is 2017. This is the bull run of 2017. Okay, and to give you even more of a well, I don't have it here, but the 2013, I don't have it here. This exchange didn't go that far back, but you know, the 2013 went something like that. Okay, that was the 2013 run, and believe it or not, hold on, let me see. It went something. It was even lower than this, so it went something like this. Okay, and kept going this way. Believe it or not, there was more gains exponentially in this bull run than there were in this one. Like, you could have, let's say, 50x'd your money, where in this one you 20x'd it. Okay, so again, Bitcoin was worth 5 cents in 2010, I believe. So so now when you look at this chart, and this is the logarithmic chart. It kind of, this is what it really looks like, but it's kind of hard to chart that because it's not all confined better. So normally people chart with this, and my point is there's a good chance that little drawing I drew is going to be this 2017 bull market when you look at this. So, you know, when we're talking how high this could go, you know, we're talking more like up here, like 160,000. You know, it's going to make this $20,000 blip look like a blip, not like a smaller mountain, you know. So but anyway, my point was, this is the weekly chart for this bull cycle. I mean, this is a healthy chart. People are like, oh, we're topping out. This is, you know, we have moved up pretty fast, but let's see. So my point was, if it's gonna like, this is the if we were to continue an uptrend, it could still, I don't think it's going to do this, but if we were to go down, we're here right now. If we were to go down to 34,000, 33,000 and keep going up, that would still be a bullish trend. So like, if we were to go down 35%, we would still be in a bullish cycle. Now, instead of following this line, which is which you could, these are the so I'm going to go to the daily chart. These are the daily moving averages. So this is the 9-day moving average, the blue one, and the purple one is the 21-day moving average. So it's basically averaging the last 21 days, where the purple one, where Bitcoin's price was at. And back in 2017, when I said we would hit those 20 to 30% dips all the way up, we did like 8 of them. We bounced off that 21-day moving average almost perfectly every time. Not quite, but very close to it every time, and sometimes right on it. And you could call that what is it called? Basically, enough traders in the world are looking at these averages that it's a self-fulfilled prophecy. Like, everyone's looking at that line. If it gets close to it, people are going to buy it because they know it's going to bounce off of it. It's kind of crazy, but that's that's how that's how it is. So that is a very important line, and it can act as resistance too. So let's see here. So, but basically, we could go back down to 42 and still bounce right off of that. So, so what do I think is going to happen with Bitcoin over the short term? If I had to guess, I think the fundamentals are so strong right now. I think Tesla buying and, Apple Pay and MasterCard now allowing payments using your cryptocurrency. There's a company that just launched. It applied to do an ETF, an electronic trading fund, which is basically will go on the New York Stock Exchange. So people in the U.S. will be able to invest in crypto or invest in Bitcoin by just talking to their broker, like, that are investing in Bitcoin, because a lot of those have limits, like you need 50 grand just to get into these investment companies. So an ETF is huge for Bitcoin and crypto as a whole. It basically gives the everyday person who is too scared to try to learn how to buy Bitcoin or doesn't even know where to go, even though it's much easier just in the past few months. They will, if an ETF comes through, they'll be able to call their stockbroker and just say, I want some of my money in crypto or in Bitcoin. And the big thing with this ETF, there's been many ETFs that have tried to be approved by the SEC that keep getting delayed pretty much. But this new one is backed by Morgan Stanley, which they have a lot of clout in the financial sector of America. So, and we also have a new SEC chairman who in the past has been a lot more kind to the whole crypto market as a whole. So I would be very surprised if there wasn't an ETF that launched within the next couple, definitely by 2022. I think we'll see that, if not this year. And that will be an easy way for anybody who doesn't feel they're savvy enough to buy Bitcoin to get on there and buy it, or to get some sort of allocation to Bitcoin. But yeah, I think the fundamentals are great right now. I wouldn't be surprised if we did something like this and then just kept going. I think once you break above 50K and hold there a day or two, I think you're going to go to 60 pretty fast because 50 is a big psychological number, like I said. So I wouldn't expect it to stick around there too long. And then, you'll get to 75, any 10, and obviously 100K is going to be a huge milestone if it happens. But again, it could happen a lot faster than I think, but I think, we're looking at like October this year to possibly hit, 1 to 200,000 in between there. I think it's going to happen fast in some sense, but, we're already in February. Within 8 months, I think going up between 100 and 200,000 is very possible, and probable. Again, this isn't financial advice. This is just what I think. You'll see. I mean, people, when we topped out here, or not even there, when we topped out here just last week with Tesla buying, and we had like a little dip from 48 to 44 for a day, people are like, that's it, we're topped out, game over. They like to do this every day, but you just have to take a look back and just look at the broader scope. The goal of these charts, in my mind, you want to make higher highs and higher lows. Higher highs and higher lows. So that you want these steps, because you don't want to go straight up, because then you're going to fall a lot faster. You want to go slow and steady, higher highs, higher lows. So you can see we got up here. Wrong tool. We got up here, made a higher high, dipped down, but now we're still above the lower low, which is really here. We could have, this is where this trend kind of started. We could have came down to here and still have had a higher low, but you see, we made a higher high now, and we can expect, as long as we stay above this line, it's still a higher low. Ideally above here would be the best. So, and I don't think we're going to go down to 36. I'm just saying, if that happened, it's still technically an uptrend. It's not, that type of percentage drop will scare a ton of people, and I know what's going to happen. People are, we're going to break 50. I don't want to miss out. Retail people are starting to get in because Eli bought. Eli Musk. And they're going to buy in the 40s, or they'll buy in the 50s. And if we drop back down in the 40s, they're going to panic sell and lose money that way, because they get too scared, and aren't taking a look back at the bigger picture of things. Like, again, with the gold scenario, if this replaces gold in every aspect, gold is Bitcoin is better than gold. Gold is not a finite. There's not a finite supply of gold. There's apparently hundreds of billions of dollars of gold in the ocean floor. There's still tons of gold in the earth, that can be mined. there's gold on asteroids, like hundreds of billions of dollars of gold on asteroids, which sounds like crazy, but then again, Elon Musk owns SpaceX. If he wanted to put the resources to it, he could go land on those asteroids and start mining them. Like, my point is not that that's going to happen because he bought Bitcoin, but because Bitcoin has a finite supply and no one can change that. We cannot print more Bitcoin. There's about 900 Bitcoin that are, yes, Victoria, I'll talk about Dogecoin. Um, sorry if you said that a while ago. I didn't see it. But basically, what was I saying? There's about 900 Bitcoin mined a day. Investment companies are buying up 5 times that amount every day. There are reserve supplies of it from mining companies, but at some point that's going to get depleted, and the amount of Bitcoin on these exchanges like Coinbase and Binance is a big central exchange where you can trade cryptocurrency. The amount of Bitcoin on these exchanges has been going down rapidly. It's simple supply and demands. And these mining companies, they have to keep selling it just to keep mining because it's very expensive to mine. So Bitcoin will the supply will keep going down. And at some point, the reserves are going to run out and people are still going to want it. So it could have another parabolic couple cycles within this bull cycle. So but again, there's only 21 million Bitcoin that will ever be mined. It's digitally mined. It's computer code that was written and executed, and it can't be changed. It cannot be changed. There's nothing. There will never be more than that made. And there's the estimate is that there's at least 2 to 3 million Bitcoin that are permanently lost because people in the very early stages had thousands of Bitcoin on their hard drives and lost their hard drives or forgot passwords, like crazy stuff, because Bitcoin was worth cents and they didn't think of it, they either gave up on it after the first year. There's deflation because the amount of Bitcoin mined every 4 years gets cut in half. So it will go from, I think right now it's 6.5 Bitcoin are mined every block, which happens about every 10 minutes. And in about 3 more years, it's going to be 3.25 Bitcoin. Something like that. But anyway, I think I've rambled on enough about Bitcoin. Let's talk about Dogecoin for Victoria here. Dogecoin started as a meme coin. It's based on it was kind of just a joke coin that a group made, and I'll show you. Like this is this is the official Dogecoin icon. And it has very, very limited fundamental value. but it basically is worth, like, it was worth less than a cent. So people were using it as like micro transactions for very small amounts of money trading. But really, it's more of a meme that got, you know, that just went viral like as a joke, except many times, a handful of times it's went viral and people put money into it because they wanted to be they either didn't know or I'll pull up the chart here for you. There we go. This is the Dogecoin chart, and this is the daily chart. And let's go back here a little bit before we go to that ridiculous. But like, this would be a viral moment for Dogecoin here. Let me see. Let's see how much it went up. So it went up, just with this, it went up about 140%. And that was in July 2020. So that was like some YouTube, what are they called? Like YouTube streamers, but influencers. Like, I believe that's what it was. They, started joking about it, and then it just went viral, and then people started buying it. And now this was just a few weeks ago, not even, a few weeks ago, Elon Musk, again, he tweeted about Dogecoin. And I remember this day, I looked at my crypto portfolio and I saw, I don't own any Doge, but I saw it's up 60%, and then I saw that Elon Musk tweet about it, and I thought 60%, I was like, oh, I'm not gonna touch that, that's already way too high. But as you can see, it ended up going up within 2 days. And it was more like a full 24-hour period. I mean, almost 1,200% from the bottom. And believe it or not, see, the problem with this kind of stuff, and I don't like Elon Musk tweeting stuff like this because he knows, he admits that it's a joke, but people are not as smart as him, or as there's a lot of dumb people in the world that when this stuff goes viral on Twitter, they start jumping in, and a lot of people put money in at that's 0.8, it's 8 cents there, okay? And then in a matter of an hour, it dropped back down to 46 point or 4.6 cents. So you're talking almost 50% of what you put in. You could have lost in minutes like that, because this went down just as fast as it went up. And then it went down even more the next day, and then it did end up going back up more gradual over the next week, but again, this is people trying to pump it, people a lot smarter than the people falling for it. I mean, I'm not going to say it's the worst investment ever, especially if you got in on it down here, and like I said, technically you're seeing higher high, higher low. And actually, this is bad because this is it's not horrible, but this is like a double top, they call it. It almost stopped at the exact same spot, and had kind of dramatic losses after that. So normally with a double top like this, it could continue to go down to at least this past resistance point, which it looks like it may be doing over the next week. So Doge has no real fundamentals, in my opinion, and I like to invest in coins that, don't hurt people's, that actually are going to have fundamental value in the crypto market. And with that, we could move on to other cryptocurrencies. I've talked about Bitcoin enough. A lot of my portfolio I have some in Bitcoin, but a lot is focused in what's called altcoins, which is basically any other coin. But I like to focus on ones that are basically in the top 100 best coins by market cap, by how much money is invested in them, and by what fundamentals they have. So this is the Bitcoin dominance chart. So this is the beginning of the year. Bitcoin topped out. Now this is the percentage of Bitcoin. So you have the total market cap. Let's say it was $1 trillion, which it's actually more than that. All of the coins combined, okay? Every cryptocurrency, all the money invested in them combined. That's the crypto market cap. Now this is the percentage of that is in Bitcoin. So around January 1st, Bitcoin topped out having almost 74% of all the money. So that would be $740 billion out of the trillion invested in Bitcoin. The rest of it was split between all of the other coins. Now, Ethereum, being the number 2 coin, had a big chunk of that. That 26% that wasn't in Bitcoin, Ethereum probably had about 15% of that, and so on. Maybe like 10% of that, and so on. But ever since, this is a good way to see how altcoins are doing, and it has been on a downtrend since then. So altcoins have been outpacing Bitcoin as far as their percentages. Now that doesn't mean all altcoins have, but many of them have, and a lot of the good ones have. Meaning Bitcoin still, since January, probably went up another 25%. That means a lot of these altcoins since then have gone up, let's say, more than 25%. Some of them have gone up 200 to 500%. Those are more maybe riskier ones, but a lot of the good ones have went up, let's say, 35 to 50%. So they're outpacing Bitcoin. And the reason I have it diversified is because I'm trying to grow my Bitcoin. So if my altcoins are growing at a faster pace, technically I'm owning more Bitcoin. And if I sold all my altcoins, now I would have more Bitcoin than when I started. Now the risk is that it could come back up, but in the overall picture, if we look back at 2017, this was 2017 right here. This is when it began, and Bitcoin had 96% of all money in crypto was in Bitcoin, and uh, over that period of time until basically Bitcoin dropped down in January 2018, it got all the way down to 35%. So altcoins, if you were in altcoins from pretty much any point, um, and you held on to them till here and then basically sold for dollars or Bitcoin, some people became millionaires in a week. That only, if you were invested in the right coins, some of them went crazy, like 5,000% gains in a week. Specifically, right after Bitcoin topped out in 2017, that's what this dip is. This is when Bitcoin was falling. All of the money, this isn't Bitcoin falling, this is the money that was in Bitcoin going into the altcoins. That's what this is. And that was a lot of money in Bitcoin when it topped out. So all of these smaller coins with smaller market caps got enormous amounts of money in a very short period of time that, like I said, some of them 5,000% gains in a week. So really, people were made millionaires who maybe didn't even have that much money. Maybe 20. If they put in $20,000, they could have easily made $1 million if they were in the right coins, and especially if they were in them up here. They made a lot of money all the way down. But then again, you had to get out right after that because these altcoins also saw, right after that, they saw their markets crash as well. So, that's why if you were in these altcoins making money all the way down, you wanted to be dollar cost averaging at least halfway through. When you, and normally when you're euphoric, they have different phases. Let me pull that up. So this is the psychology of any market cycle, but it's works. It's very true for the crypto market, and um, I would say we're somewhere in optimism right now. Um, and like I said, I think we're going to see enormous gains even from here. I mean, at least 100,000. I think will happen. Again, not financial advice, but I think it will happen, and that this is when you're going to reach euphoria. I'm a genius. We're all going to be rich, and when you start to feel like that, as hard as it may be, that's the time you want to at least take out a lot of profits that you've made. It could keep going up, and you could feel bad about losing out on some of the more gains you could have made. But the the bad feelings you have by selling when you're here are nothing compared to the feelings you're going to have if you don't sell and you get down here into the denial, anxiety, panic part. So, really, I would I would say start selling little bits at a time all the way up. And when you really feel like euphoric, like I think you really will have that type of feeling. Um, that's when you want to be very cautious. That's when, and another thing you can do, like that a lot of people don't even know, which is why I put these, or one reason I'm focusing on these videos is you can put stop losses in your trades. So you get up past, let's say Bitcoin gets up past 100,000, you can put a stop loss at $90,000. So basically, if the price ever gets to that point, it will automatically sell a lot for you. So, you can protect yourself in that way as well. Now, the only problem with that is that if it falls extremely fast, it may skip right over that price point. That probably won't happen with how much money is invested. People are going to be still buying a little bit when because they'll think it's just a dip. They won't think it's the end of the cycle. But anyway, again, this is the Bitcoin dominance chart, and it's followed this trend line. So I'm hoping that because I'm invested more in altcoins right now, I'm hoping we come down and test this this trend line here, which has been true for this is all the way back in, and then I'll probably sell a lot of my altcoins for Bitcoin at that point. That's my plan anyway. We'll see what happens. But yeah, the altcoin space. So, and I was comparing Ethereum to Bitcoin. So like I have a lot invested in Ethereum. Ethereum is basically, they compare, is this music over? Let's see. They compare Ethereum to oil as gold is to Bitcoin, or Bitcoin to gold. Ethereum, they say, could be digital oil, meaning everything's going to run on it. Ethereum is a smart contract cryptocurrency, so it basically runs smart contracts. So, and it's a blockchain like Bitcoin. And basically a blockchain is you can run a node which basically becomes part of the blockchain, okay? And there's the more nodes, so I could run a node here from my computer, and it could be an Ethereum node, so it's hooked into the Ethereum blockchain, and it's basically now there are thousands, if not tens of thousands or hundreds of thousands of these nodes around the world, all running the same Ethereum blockchain, and they all talk to each other to make sure that the blockchain is right. So basically they compare their ledgers with each other constantly to make sure everything is in order, so nothing can be messed with. And that's a very simplified version. But it takes away having a central bank or a central entity that can mess with the information or the money, or the monetary element or anything. And so that's why blockchain technology is now moving into every industry there is. Every industry will have some form of blockchain technology incorporated with them within 5 years, I would say. Coca-Cola is now using it for their logistics with bottling and shipping. It just makes it so one person can't make a mistake and mess up the whole thing. And it protects, Bitcoin and Ethereum. They can't be hacked, because you would literally have to hack hundreds of thousands of computers at once all around the world to make it work, like to actually do any damage. It's not possible. And that's why, and then you have these banks with people running them who tend to be, people can have flaws and greed, and they can be corrupt and try to mess with the system to help themselves, to take advantage of people. So that is why a lot of people look, a lot of countries that have been their currency has been printed to the point where you can find bags of their currency in the dumpster because it's worthless. A lot of the countries like that have turned to Bitcoin. Because it can't be messed with, and it actually has value around the world. So, with the pandemic and everything happening, a lot of there's been tons of printing of money, tons of inflation. Your dollar in the bank is losing small percentages of value most days. Excuse me. The dollar has been slowly in decline for decades now. So, due to inflation, due to massive printing of money. So, my point is, it can't be messed with. So that's blockchain technology. Ethereum is basically going to be the supercomputer, some would say, that runs any application, any decentralized application, and runs a lot of the technical infrastructure put into place in a lot of companies. It's more efficient. It helps it so like mistakes can't even happen, and if they do, it won't execute. So it just can help in more ways than we can even imagine right now. And most of the cryptocurrencies you see, they're not currencies. Most of them, yes, they have coins in value, but you can think of the coin more as an investment in what their vision is and what their fundamental use is. They are trying to improve sectors of industry. So the biggest cryptocurrency sector right now is called DeFi, decentralized finance, and there's probably around 50 cryptocurrencies that are actually good, that are in the DeFi space, and 90% of them run on Ethereum's blockchain. So they are the majority of these coins run on Ethereum's blockchain, even though they do something different fundamentally. But 90% of developers getting into cryptocurrency, they learn the Ethereum language, Solidity. They learn that, and they start developing using the Ethereum language and Ethereum code. And they create decentralized applications with Ethereum. So this is Ethereum to Bitcoin's chart, okay? And I just wanted to explain the trend lines. Let's see here. So this is the 2017 high, okay? And I'm just going to take it from where it closed here, roughly here, and this trend line, so this is Ethereum to Bitcoin, but this was a 3-year trend line. You can see it hit here, and then it stayed in there for about 3 years until very recently. And this is why I have a lot of my investments in Ethereum right now. Not only because I believe it's going to be a huge factor, a huge cryptocurrency worldwide, but it also broke this. This was on the week of January 18th. It broke this trend line. So basically what that means is that, and as you can see, let's go to the daily here. It came up, it broke this trend line, and then it came back down and used that trend line as resistance. So that's what you want to see. You want to see breaking trends and then coming back down and using it as support instead of where it was resistance before. Before it would hit it and bounce down, now it broke it and now it's coming back down and using it as support. And it's been hitting it as support a couple times. Even today it's hitting it as support. But now you can say the last time this happened, where Ethereum basically started gaining momentum on Bitcoin, okay? This basically, it's at 0.035. That means one Ethereum is worth 3.5% of a Bitcoin, okay? But back in 2017, it got all the way, no, that's not right. That is a flaw. It got all the way up to 17%. And that happened relatively fast. We're talking, it basically started, you see this trend line? This was a similar trend line to what I just drew, just on, and I'm sure it went back even longer. But you see, after it broke this, it went from 1.6% of a Bitcoin up to 5.7% of a Bitcoin very fast. We're talking March 11th to March 25th. 2 weeks. It went up roughly 4 times what it was against Bitcoin. So, and then it came down, made a higher low, and came up, higher high, higher low, and boom again. And I mean, this all happened. This was June of 2017. So this happened in a couple months, and we're talking going up. I want to say maybe 12x, 12 times what it started at in a couple months against Bitcoin. So let's say you had enough Ethereum to be worth 1 Bitcoin. when you were down here, okay? You had enough Ethereum to have 1 Bitcoin. So let's say that was 50 Ethereum or 60 Ethereum, okay? Equaled 1 Bitcoin at that time, okay? So you had that, okay? And you rode this all the way up, and even if you sold some on the way, you could have turned that 1 Ethereum, or that if you ended up selling it, all of it once, you know, even if you dollar cost average on your way up in Bitcoin, so you're selling your Ethereum for Bitcoin on the way up, you could have turned that 1 Bitcoin into 10 Bitcoin, because once it got up here, all the way up here, it was worth over 12 Bitcoin. So that is, but my point is, these trend lines, this could go, you know, up pretty quickly, and you know, it's kind of a perfect chart to be that long, 3 years long, break out and then come and touch it as as support. That's what you want to see, because normally you break, come back, test as support, and then you have your boom. That's normally what happens. So Ethereum, this is why I've told my brother-in-law to, you know, if you feel like you missed the Bitcoin boat a little bit, invest in Ethereum, because at the moment in time, I think Ethereum is a very good investment, and I believe in it. This is not financial advice, but this is what I see when I look at the charts and do my research on it. And this is Ethereum's dollar value chart. So it has had, let's try to zoom out here. So this is its all-time high. It reached about $1,420 in 2017. You can see it came up. It did break more recently, actually. Not when Bitcoin did. Bitcoin did, and then about a month later, I would say, Ethereum broke its all-time high. And you can see here, it came. Let's draw a line here. It came up, it passed it a couple times, but then it kept getting rejected, okay? Kept getting rejected, and then finally, when it broke, and it held there most likely for like a 4-hour candle, or a 12-hour candle, or a full daily candle, you can see we jumped right up to, from 1400 to up to 1700. And then had a little break there. But then we've slowly kept going, and you know, we just hit all-time highs a few days ago. But my main point here is that Bitcoin's all-time high was 20,000. It broke 20,000. It went up to 40,000 within another month, I believe, and then today we hit 50,000. So from its all-time high, it went up 150%. Ethereum's all-time high was about 1,400. Okay, it was like 1,420, but let's see how high it's gone. So it's gone up 34%, roughly. Let's say 35% from its all-time high. Bitcoin went up 150% from its all-time high. So my point is, normally these bull runs have a flow to them, okay? And they call it alt season, Okay, so Bitcoin runs up high, it pumps high, normally breaks its all-time high and goes a little higher. Okay, that has happened. Then you see that people, when it hit like 40,000, people take profits, or they take their money that they made in Bitcoin, some of it at least, and they put it into Ethereum and some of the other major top 5, top 10 altcoins, okay? And then they will start to they will have their turn basically. And then once they rally, the money will transfer down into smaller altcoins, the top 50, and then the top 100, and then they have what you call your S coins, which you guys can figure out what that means. But I like to stay away from them. But my point being, if Ethereum follows Bitcoin's lead and actually goes up roughly the same percentage, you're looking at, hold on. I can't even it's roughly $3,500, between $3,200 and $3,500 for Ethereum to do what Bitcoin did. And many people argue Ethereum has, I've heard the comparison, Bitcoin is email while Ethereum is the internet. So in the long run, Bitcoin will be a store of value like gold, but Ethereum could be a supercomputer that runs a lot of the world. So, you know, I don't think there's any reason to believe Ethereum can't reach these levels. You know, if I said I think Bitcoin will hit 200,000 this cycle, I think Ethereum could easily hit $15,000 per Ethereum, which would be a couple more than Bitcoin as far as multiples than Bitcoin. But they will still be doing very well, and Ethereum is technically a little more risky too, I would say. But there's now when it comes to what's holding Ethereum back, a lot of people would say it's basically Ethereum 2.0 needs to come out. They just launched like phase 0, where people you can stake Ethereum. You need 32 Ethereum, and then you can stake it and basically become a node, like I was saying, except there you will receive like between 5 and 10% interest on that money until Ethereum 2.0 comes out, and then you'll be able to withdraw it. You can't withdraw it now, but still, I believe it's like $5 billion has already been staked in Ethereum. This is people putting their money there that can't touch it for 1.5, 2 years. So these are people that believe this is the future. And they're making good interest, way better interest you can get, you know, at any bank or anything like that on their Ethereum. But yeah, but until then, one of the problems with Ethereum, it uses gas as whenever you send a smart contract, I said Ethereum runs on smart contracts. Whenever you use a smart contract, you have to pay a fee, basically pay for the gas that you're using to send that smart contract. And currently, the fees can be, especially when there's a lot more people using it at once, a lot of traffic, the fees can be extremely expensive for a a retail investor, someone just wanting to do $100 or something like that. So it's not worth it. But there are, there's other competitors to Ethereum. Polkadot and Cardano are the two main cryptocurrencies. They're currently number 3 and 4, or 4 and 5 as far as market cap goes, as far as the all cryptocurrencies. So there's a lot of money invested in them, but it's because they can compete with Ethereum until Ethereum 2.0 is up and running, which will probably be not till 2022. And when that happens, the gas fees I was talking about will be minuscule. They'll be nothing compared to what they are now. It will be cents to send $100 or any amount of money. It will be 100 times, if not 1,000 times cheaper than what it is now. So, and there's way more benefits besides that will make Ethereum better once that comes out. So you do have some competitors, like here, this is Polkadot, and it's USD chart, so it's dollar value. And today is a good day for DOT. It's basically, the beginning, December 27th, it was worth $5, and it broke $30 today. So it's doing really well, and it's also, the good thing about DOT is that it is supposed to be interoperable with Ethereum, so it can basically talk to Ethereum's blockchain. It can smart contracts can go from one to the other, so they can work together. Whereas Cardano doesn't work with Ethereum, so in my eyes, that's a big negative. It's better for them all to grow together. But I compare these crypto companies, or these cryptocurrencies, I compare them to investing in Apple or Amazon or Tesla in their beginning stages. And you might look at some of these evaluations and think, oh, it's too late. I don't think it's too late at all. I think you're in the top of the second inning if we were in a baseball game. Easily the first quarter of a football game. I think I think this bull cycle will probably go the entire year. And Bitcoin could top out in October if I had to guess. No one knows. It could go much longer. I hope it goes longer. I hope it's more of a steady pace and keeps going longer. But I really believe these investments are at their beginning stages. So obviously you don't want to. It's better to wait for the dips. Like some people, you know, for instance, right here, we had, I'm going to go to the 4-hour chart here. You went from $8 all the way up to $19, okay? Now, and this was in, you know, basically one day. I wouldn't tell someone to get in at $19. I wouldn't tell someone to get in at, you know, $15, even though it ended up going up that high, because once you've missed the boat on a breakout like this, it's better let it go up, let it finish its run, and wait for that dip, wait for it to come back down. And there are ways to tell when the dip could happen. So I'm going to use this. Let's use what's happening right now as a example. So there's something called the Fibonacci retracement, and this is basically it's used in all sorts of finance markets. You could really use it for trading anything, but you want a clear bottom, which so we'll use this more recent bottom, okay? Hold on. Actually, you do the top first. So it came up and it hit this top, and then we see the decline, okay? So we're going to take the top here. Let me get my tool back. You're going to take the top here and go down to the bottom of the wick. You could even do this one right here. And then let's just going to extend the lines right here. So these lines, this is called the Fibonacci retracement, okay? This is once you have a clear bottom, and then once it hits a top and heads back down, that's when you can create this. You can also do this on the way down, but we're going up, so let's look at that. Basically, these are like psychological numbers or equations that people use like as it just works really well. It's kind of like voodoo magic. I don't know. It's basically just, I mean, and again, it might be a self-fulfilled prophecy because so many traders use this, but you can see it came up, and then when it started coming down, you could have drawn this pattern, okay? And as you can see, it came down and it almost perfectly touched this. This is called the 0.382 line, and then we came back up, and I mean it was bouncing, and it's not perfect, but it can give you a very good idea. And it also will tell you, for this to be a full technical analysis pattern, like to complete this pattern, if this breaks this line and stays above it a little bit, most likely we will come down, hit it as support again, and then go and hit this line. That will be the next line of support, because this is all-time highs. So we have nothing to look back at history there's nothing in 2017 that's above this line or above this dollar value for Polkadot. Okay, so most likely it will come down, it will hit this, and once we break this level, it might hit it as support, but then the next line you're looking for is right here around 37.7. And you can also look at that. So a good idea if you were trading this, not financial advice, is to, if it comes back and hits here, you could look at this point to take some profits out, because most likely this will act as some sort of resistance and it will come back down. It might not come all the way back down to the next one, but it might stick around here and then until it breaks out, and then you have your next lines of support, to complete the pattern. Now, technically, no, that's right. So these are just Fibonacci is really good to use when you have no previous history of what it's done. Otherwise, you can use I'm going to erase this. Actually, you can keep it there. I'm just going to clear out these. Just to give you an idea of another pattern that was here. It's not that clear of a pattern, but if you follow these trend lines, you can see it kind of started moving down here, but once it actually broke, you had a clear breakout here. And this isn't a great example, but my point is with a lot of patterns, you can really you can tell when things are going to start moving. And like if you were going to trade this, you could put your buy-in at $28 here, because you've broken the line, and chances are it's going to have a breakout up because you broke the line going up. So you don't have to buy it down here. You can wait for that breakout to improve your probability of not losing anything. And not only can you put your buy there, but once your buy is fulfilled and you start, let's say it was one of those fake out candles, so you bought, you can put a stop loss like right below the line. So if it comes back down below that line that I deleted, okay. All right, so you broke out, you set your buy, and you go up, and there you made some profits. You can take some profits out there, okay? Or you can set your stop loss right below this line. So if it goes up and then fakes out and comes back down, kind of like what this one did, you sell, and maybe you lose 10% of what you put in, but the probability of that happening are way lower than it breaking out to the upside. And as you can see, we're still going up. So there's ways of using these patterns to improve your probability. And another, so the Fibonacci's one pattern, or one indicator you can use. The normal patterns like triangles or wedges or bull flags, bear flags you can use. But some other ones I also use this is called the MACD. And basically, so I'm going to pull this one on the bottom here. You can see this is the selling pressure, okay? These are like amounts of selling pressure, and like how large kind of like the selling volume, but it's not just the selling volume, it's the selling pressure as well, and like how much selling is happening at what rate, and then as you can see, it starts declining here pretty fast, and that's right here. So it starts declining right here, and you can see, especially if we go to like the 1 hour, that's probably a better. So this is the same chart, okay? You can see right here the selling pressure starts to go the other way. And once it flips, this is buying pressure. But this was a good indicator that the sellers are getting exhausted, okay? You don't want to just use this, but this is a good indicator that maybe there's not many people that want to sell any lower than this. So there's still a few people, but the buying is picking up, and then you move up here, and then as soon as you see kind of a dip, you can, it's a good indicator to combine with other indicators to again improve your probability that the tide is changing and maybe it's a good time to buy or sell. Now this is if I don't day trade. I prefer to look at long-term time frames, but you can use this on the daily. You see, like from here to here, you see that it's a green candle. It didn't even really break where the previous candle started, so it's not like, oh, this is going to start to go. It's not. It's going to start to rally. But you can also see that the selling pressure is also diminishing. So it's just another indicator you can use that tell you, you might be looking at the chart correctly or incorrectly. And I don't know if that makes sense to everybody, but a lot of this stuff can be kind of confusing at first. And this purple chart indicator here is called the RSI, which stands for the Relative Strength Index. So basically this is whenever it's above 70%, that means it is overbought. Okay, that means a lot, like it's very overbought. This, in a bull market, it can stay overbought for a very long period of time. So this is This one's actually better to use. I mean, once you get up to like 90, like when Bitcoin got up to like 94, 92, that's like the highest it's ever gotten in history. That is a good indicator, like, um, we're due for a correction. So this can be really good on the long term, but you don't want to just go by a lot of on like 5 minute charts or 30-minute charts. A lot of people, even the hourly, look at the RSI and they'll literally buy whenever it peaks above, or sell whenever it peaks above 70 and buy whenever it goes below 30 here. Um, but uh, but again, on the longer term time frames, it could stay above 70 for a very long period of time. You really want to use it more when it's on long term, when it gets to extreme points like in the 90s, or you look back on history on, because this is like a chart you'll have back in 2017. You'll see how high it got and for how long it stayed there, even though Bitcoin is broken its all-time highs and there's no dollar value to compare it back in 2017. You could compare the RSI levels, and yeah. So I use the MACD, the RSI, the Fibonacci when it's applicable, uh, and uh, and then patterns. Different patterns here. Let me pull up some patterns here. So these are normal trading patterns. So let's see here. So this is like a bull flag. We have a breakout and then we come down. Normally it's only like, 10 to 20% of what the breakout was. Maybe 10 to 30%. But you come down, and then if it's more than that, then that may not be a bull flag. Bull flags are normally between like 10 and 30% max. If it comes down, if you break out and come down like 50%, you're setting a higher low, so that's good. I'll show you what pattern that is. But a bull flag is more minimal, so, and the move could happen faster. So it's like 30%, and then you break back up. This is a symmetrical triangle. You go up, you break out, and then you come down and hit, let's say, 50% or even a little bit more of your breakout, but it's still a higher low. Then you come up and make a lower low, a lower high. So it forms a triangle, but this could go on for weeks, and people will trade in that pattern. And if it came up from the bottom to start, most likely 4 out of 5 times it's going to break up. Okay, and this one, a bearish symmetrical triangle, it came from the top down, and you bounce around in this triangle, and then you come out the bottom, and then you're going to break down. And you can see it came up, came back down, possibly using it as support, and then coming back up. But there's a lot of patterns you can use to figure out what you want to, how you want to trade in these markets. And the past month or two have been we're in a bull market, so a lot of gains have been made in the past um, few months. And really, what I want to be doing with this channel is I want to be focusing on doing charts like this for hold on a second. Okay, we're just gonna sorry, one second, I'm gonna get the music going. Okay, we're gonna do this one again because the other one isn't loading. But anyway, my goal for this channel is to be going through as many cryptocurrencies that are relevant that day, as far as like having breakouts or just relative, being important in important sectors of the market, or just being major, some of the top cryptocurrencies and altcoins. I'm going to be trying to do so for example, this is the Cardano chart. I want to do patterns and do technical analysis for the USD chart for Cardano, and then I would do one for the Bitcoin chart as well. And anytime both charts look good and the patterns look good, that's normally coins I would focus on if I were trading, not financial advice. Thank you, Mary. I'll have to fix that on my YouTube channel so you guys can leave comments. But yeah, that's what I'm going to be focusing on, doing chart patterns for these coins. And there are literally over 10,000 cryptocurrencies, but I'm going to be focusing on mainly ones in the top 100 and more focus on ones in the top 20. But then there's a few that are just rising dramatically because they have such good fundamental use, especially because this market is going to be growing very fast, I believe. So I don't think many millennials are going to be buying gold. I think they're going to get on PayPal and buy some cryptocurrency. So let me just chart out one of these real quick. So this is Litecoin. And it's had a good, Litecoin is looking really nice. Litecoin is compared to it's another store of value, but it's also used for transactions, and it's a number, I think it's like the number 7 coin now, but it's compared to if Bitcoin was gold, Litecoin is silver. So it's very similar to Bitcoin. Let's see. So first, let's draw this trend line here. So this is on the daily chart. So this is a, you know, we're stepping out a little and looking at a longer term time frame. And now we have a top here. So we're kind of forming an ascending channel here. And it's nice because we have these two big points to go by now, and 2 points on the bottom. So, you know, there's a good chance over the next week or so it could come down and hit, you know, because time's going, it's not just gonna drop and go down to here, but most likely it will take a little time. You know, it might go like this, hit here, and then keep going to higher highs. That is a very possible reality. Now it could break out, it could stay around here. That was a horrible. Could come around here and break out above, and if it does break out of this line, it will probably use it as support, or it could go up pretty high pretty fast, but we'll see what happens with that. It looks like we have a bottom and a top now too, so we can do the Fibonacci retracement. So as you can see, we came up, we hit here, we came down almost exactly on that, and then we came back up and we're making support on this. If I go to the 5-minute chart, you can see this even in a little more detail here. We came down, hit this, came back up, and we're kind of, you know, it's a little off, but it looks like we have a double bottom here. So basically what that says is this line could be a support, and the reason it's support is because you have it back here acting as resistance. It was resistance back here, now it's support. Or yeah, it was resistance here, and now it's support here, and that tends to happen. You could use this whole range. 1 second. Can't find my rectangle. Oh, here we go. This whole, there's a lot of resistance and support in this in this area. So most likely now we are in consolidation. So we will keep consolidating, most likely forming a triangle. You take the bottom here. This will, I can almost guarantee this will keep bouncing in this triangle, and it will break one way or the other. I mean, that's obvious, but I believe it will bounce in this triangle. It probably won't go all the way to the end. They normally don't. They normally break out a little bit before the end. But if it breaks this line, it's probably going to dump down to here, if not the next level. But there's a lot of support here as well. So from this consolidation, it's the same thing. It's just happening again. So let me get rid of this. So yeah, I think we're going to be consolidating here, and then most likely I would bet, because we came up from the bottom, chances are we're going to continue up after consolidation. So that would be my guess. Again, not financial advice. So that's the Litecoin dollar chart, which is looking, if we back out a little bit here, it's looking very healthy. You saw higher high, higher low, consolidation, broke a pattern. I can show you right here. 3 hits on this triangle. 1, 2, 3, broke, boom, we go. Higher high. And now it looks like we're doing a similar thing. Now, this pattern I just drew is the same sort of thing, but we might break out and only come up to like here and start forming an even longer consolidation. So yeah, you're going to have these mini breakouts, but that doesn't mean you're always going to make a higher high when you break out. It might, it could be 1 to 2%, which is a lot in the investment world, but we're talking when it broke out from this longer pattern, it went up from the breakout. We went up 67% if you time the top, 67%, and that was over 11 days. Okay, so the immediate breakout was still, it was a day and a half, and it stopped. It went up 15%, 14%. But the uptrend did not change. And now, we can continue going up higher, or we went up. It went up this high, 67%, I think I said. It's probably time for another consolidation, like this one, before another larger move up. But yeah, that's and yeah, so the way you can tell about how high your target should be, besides like a Fibonacci level, we draw this triangle, which really was like here, but if you measure the width of like the beginning, it's about 38%. So if the triangle, because this pattern actually worked, technically it should have went up about 30, what did I say, 38%, which is, it's messing with me, which is right here. Oh, but I'm not on the, hold on. From the breakout, oh boy. So 38% would be right there. And as you can see, before I measured this whole move, but it really completed this technical analysis pattern when it hit here, which is very close to where it had it dipped back down, if that makes sense to you guys. Once it got up to here, that completed this triangle formation pattern, because that's the width from here to here. That's how those are measured. So yeah, I'm planning on doing charts like this for a lot of these coins, Monday through Thursday, from 3 p.m. to 5:30 p.m. And I'm planning on doing the dollar chart and the Bitcoin chart for each coin, and I'm planning on doing a longer term time frame, like for instance that Ethereum, if we bring it out to the weekly or the daily would probably be better. Where this triangle on the Bitcoin to Ethereum pairing, this is a long term. So this I won't have to update once I make them for a lot of the coins. You know, we'll update it, but it won't be as many times as like we'll do the 4-hour charts a lot, and the 1-hour charts, and the daily charts. Like we'll focus on those for a shorter term time frame for you to figure out what the next move is for your trades. Again, not financial advice, but yeah, that's what I'm planning on doing with this channel. I know I did not much of that at all on this stream.